Gentleman from Georgia, Mr. Loudermilk, for 5 minutes.
Thank you, Mr. Chairman. Mr. Secretary, thank you for being with us. Good to see you again. I want to start off by asking you about the non-voting state insurance commissioner seat on FSOC. While I support the long-standing idea of state-based insurance regulation, I recognize that the insurance industry is critical to the overall stability of our financial system. Nearly every aspect of our financial system is represented by its primary regulator on FSOC with a voting seat. But without a voting seat for state insurance commissioners, the council is missing the direct input from the primary regulators of the industry. My question is, do you agree that we should have state insurance regulators with a voting seat? And if not, why?
Well, I absolutely agree with you that the insurance sector is critical and needs to be represented. I would note that there is a voting member of the council who is an independent member with insurance expertise. That person is confirmed to that position. And in addition, there is a state insurance commissioner, a non-voting member, but someone who serves a 2-year term designated by NAIC. So there is a good deal of understanding of the insurance industry represented on FSOC, and I think that's totally appropriate.
Do you not feel that it would be better representing of the primary regulators of the insurance industry if the non-voting member from the State Insurance Commission was actually a voting member?
So I don't have a position on this. Congress set up FSOC in this manner, and what I can tell you is that all of the members, voting and non-voting, contribute importantly to the work of FSOC. I've really never seen an issue that I've dealt with where the voting status of a person who's part of FSOC would have made a critical difference.
So it would be fair to say that if Congress did seek to change this, you would not oppose?
Well, I would look at the specifics, but I would agree with that we do need to have insurance expertise, and happy to look at something specific that you're considering.
Okay. Well, thank you. Earlier, you were asked about the Federal Insurance Office, FIO, plan to collect 6 years' worth of granular data on climate-related financial risk. FIO expects hundreds of property and casualty insurers across the country to assume the burden of compiling this data. You asserted that FIO looks to work with state insurance regulators as required in the Dodd-Frank Act, but FIO claims that the data they had initially requested was, quote, not available or could not be obtained in a timely manner from state regulators. Secretary Yellen, how did FIO define the timely manner for the purposes of collecting this data?
Well, my understanding is that the NAIC intends to conduct its own survey and recognizes the desirability of collecting this more granular data. And given that both FIO and NAIC want to collect this data, there clearly exist opportunities to collaborate. I believe they're certainly trying to do that.
Well, I guess I'm a little bit confused is they defined that they needed the data within 30 days of the request. Now you're talking a significant amount of data, but they were obscure as to what they needed the data for. And so why did FIO anticipate needing this data within 30 days? So you're talking, asking these insurance questions that are very detailed and giving folks 30 days to respond, and it was kind of obscure in the question. I'm just wondering why such a short time frame.
Okay, I must admit I don't understand if that's the time frame or what the logic was, and maybe I can get back to you on that.
Just with the remaining time I've got, in your view, was FIO's limited effort of trying to obtain this data within the short time frame and then claiming that they weren't able to get it, is that actually consistent with the Dodd-Frank requirement to coordinate with state regulators, not just ask them, can you get this data, and they say we really don't have time, and then say we couldn't get it? I mean, To me, it seems like working with them is coming up with a reasonable plan to get the information they need and be clear as to why.
I believe they intend to do so, and it's appropriate.
Thank you. I yield
Gentleman
back.
from New Jersey, Mr. Gottheimer is recognized for 5 minutes.
Thank you, Mr. Chairman and Ranking Member Waters. Hello, Secretary. Thank you for being here. Secretary Yellen, are you aware that from 2014 to 2019, 200 American colleges and universities illegally withheld and failed to report information on $13 billion in undisclosed contributions from foreign and authoritarian regimes?
I don't believe I am. I'm sorry. What happened? The college, something about colleges?
Colleges received and didn't report funding from foreign and authoritarian regimes. I've sent you a letter, which I'll make sure you get a copy of, urging Treasury to coordinate with the Department of Justice and Department of Education to investigate these American colleges and determine whether any of the foreign and authoritarian regimes contributed to the funding of anti-Semitic protest groups on our college and university campuses. And so I'll also enter the letter into the record, if that's okay, Mr. Chairman.
Without objection.
And again, thank you for reading it. And if you can get back and determine whether there are financial connections between those foreign entities making large donations to our institutions of higher learning and the outside funding of anti-Semitic protests on campuses, I'd be grateful.
We'll respond to your letter, try to do it in a timely way.
Thank you. Madam Secretary, the last time you were in front of this committee in June, you agreed with me that the state and local tax deduction, or SALT, has had a disparate impact on different states, including New Jersey, where I'm from. You've also committed to finding a fair solution for the misguided limit that leaves double taxation on many of my constituents, especially middle-class, hardworking families. There may be a potential vote on SALT legislation as early as next week. The bill would double the SALT deduction for married couples in 2023 from $10,000 to $20,000. Do you believe, following the question when I saw you last time, do you believe that this legislation will help ease the disparate impact of SALT on married couples in New Jersey?
I agree that SALT has had a disproportionate impact on different states. There are also fiscal implications from the legislation that you discuss. I haven't had a chance to examine, and it's really up to the White House and the President to decide whether or not to be supportive of this.
My concern from a Treasury perspective is the IRS preparing for such a change should the bill be enacted, because they would have to move pretty quickly.
This would be for 2023?
Yes.
I'd have to
If
look
you can get
into
back to me on that, I'd be grateful. We know that Hamas relies on support from the Iranian regime, the leading state sponsor of terror. As Iran deepens its ties to China and Russia, we are reminded they cannot be trusted and must be held accountable. Iran has directly or through their terrorist proxies, including Hamas, Hezbollah, PIJ, killed hundreds of Americans, attacked our bases and our allies in the region. Treasury has implemented several rounds of sanctions on Hamas and Iran in the aftermath of October 7th. Madam Secretary, do you believe that the U.S. should impose sanctions on China because of its ties to Iran?
I'm sorry, on China because of its ties to Iran?
Yes.
Well, that's a question really for the State Department and the interagency, and I'm not aware that that's been considered. I don't have a position to offer you on that.
Okay, because concern that Treasury hasn't enforced Iran oil sanctions, especially sanctions targeting China and its dozens of teapot refineries that are responsible for practically 100% of Chinese oil imports from Iran.
Look, what I can tell you is that the Treasury Department and OFAC are doing everything that they possibly can to crack down on illegal Iranian shipments of oil, and we've recently had actions in that regard and believe seizures of illicit material as well.
Thank you. I know Treasury's OFAC publishes a list of individuals and companies owned, controlled by, or acting on behalf of individual groups and entities such as terrorists. Their assets are blocked, and U.S. persons are generally prohibited from dealing with them. In recent weeks, it's been reported widely that UNRWA employees have engaged in terror activities and materially supported Hamas in the massacre and in other depraved atrocities committed against Israel. Is Treasury considering terrorism designations for UNRWA employees that have been found to be material supporting Hamas or engaging in terror activities themselves?
We've engaged, as you mentioned, in numerous actions against Hamas and a wide range of supporters.
While the U.S. gives millions of dollars to UNRWA every year, The organization doesn't screen for known terrorists and terror affiliations the way U.S. agencies like USA would do. Do you believe that at minimum, the UN agencies that receive U.S. aid should at least vet employees against U.S. terrorism lists?
I don't know. I don't know the details. I'm happy to look into that. That certainly seems reasonable.
Thank you, Madam Secretary. I'll follow up with your office. Thank you so much.
The gentleman from Ohio, Mr. Davidson, is now recognized for 5 minutes.
Thank you, Chairman. Madam Secretary, thank you for being here today. And I just want to highlight a couple of the activities of FSOC. For the last 2 years, FSOC has made digital assets one of its top priorities. Do you believe that it is appropriate for FSOC to list digital assets among its top priorities, given the relative size of the market?
Well, the market is relatively small, and I believe the annual report states that. And the connections are not enormous to the banking system, although role involvement in digital assets did play some role in the banking problems we had last March, particularly with respect to Signature Bank and to Silvergate. So there are concerns along those lines.
Well,
but
in that
there
sense,
is the potential for example, stable coins that we've made recommendations to Congress require regulation.
Gentleman will
They could
suspend.
If
the Secretary will suspend, if you could please exit the dais for members. Thank you. We can continue. Thank you.
Stable coin, there is no appropriate regulatory framework.
we've certainly been working on that. It'd be great to get it across the finish line.
Well, I appreciate that, and we've tried to work on a bipartisan basis with the committee to see legislation enacted.
And so the concern would be that there's some systemic risk to the market because of the introduction of digital assets. And you referenced Silvergate. They didn't pose a systemic risk to the market. In fact, they wound down in a very orderly fashion with no risk to the market. Not true of Silicon Valley Bank, but that was interest rate risk, not digital assets. Signature, on the other hand, there was an FSOC meeting on Saturday, and on Sunday, the assets of Signature Bank were seized. And former Congressman Barney Frank, whose portrait hangs right there, former chairman of this committee, said that it was because they were banking crypto, not because they were insolvent. So it kind of highlights, is there a coordinated effort because there's a disfavored industry like digital assets, or is there a coordinated effort because there is actually systemic risk?
Well, FSOC has recommended to Congress that stable coins require a regulatory framework. No stable coin at this point may yet have achieved the scale that would pose a systemic risk, but certainly that could happen if a stable coin were widely used for payments. And you have the classic run risk that's associated with that if the stable coin proceeds are not invested in a secure and utterly safe manner.
This is the case.
And we've seen this happen with similar types of it's essentially a banking type of product.
It's not fractional reserve banking, and those banks are regulated. Stablecoins certify that they have $1 of government-backed securities for $1 of tokens issued.
They don't always certify that.
No, the three that are regulated in the United States by the New York Department of Financial Services, or four actually, do certify that, and they are state regulated. The one that doesn't, that the Treasury Department and others seem unwilling to address by providing clarity in our market, don't certify that. Tether is a time bomb, and it is offshore, and it's the only thing functional, frankly. Everyone is moving offshore because we can't agree to regulate our own markets. And frankly, there are people that really would love to regulate the market. There just always seems to be an excuse not to. Kind of like, to change topics here briefly, the GSEs. So there was a report that was due to Congress on September 30th of 2021. So quite a while ago, that report was due as to what is the plan to end the conservatorship, which has gone on longer than Britney Spears' conservatorship went on at this point. So it would be great to get the plan, if not whether we agree or not, but could you commit to give us the plan?
Well, that was a promise made by the previous administration.
It's a statutory
in its final
requirement,
days.
Madam Secretary.
And we are committed to working with Congress to clarify what a reasonable strategy is for the GSEs.
Whatever the plan, it is already the law to give us the plan, and I yield back.
Gentleman's time has expired. We'll now go to Mr. Caston of Illinois for 5 minutes.
Thank you, Mr. McHenry. Pleasure to see you, Madam Secretary. I want to touch on a couple things, but the first, I don't know if you had a chance, and it doesn't matter if you read it or not, there was a CBO report that came out on January 18th about demographic trends in the United States. It's been rattling in my head for a while, and it was 2 weeks ago, but it said, among other things, that net immigration, which some of my colleagues have mentioned, is running twice as high as was expected, and that the population of folks immigrating to the United States are unsurprisingly, overwhelmingly of working age, 25 to 54. The sort of demographic trend that I think is the kind of thing that keeps Tucker Carlson awake at night, that our population is aging and our country is getting more diverse. But what I'm wondering if you could speak to is the conversation with Mr. Vargas, we talked about the fact that this economy is doing things that economies aren't normally supposed to do. GDP is rising. We keep creating jobs. Unemployment rates keep falling. And how much of that is directly attributable to the fact that our workforce is growing so much faster than we anticipated?
Well, part of it is due to the fact that labor force participation has increased.
I don't mean just the participation rate, though, the actual number of workers.
Yeah, I mean, partly it is immigration, but it's also we're seeing a big pickup in adult labor force participation in the aftermath of the pandemic. Perhaps some of that, some of it is the availability of jobs, which has been amazing, and some of it is the ability to work at least partially from home, maybe drawing people into the labor force who otherwise wouldn't do so. But that's one way in which we continue. Just the last 3 months, we have an average of 290,000 jobs a month being created, which is quite remarkable.
Yeah, I mean, I think about a comment that Jay Powell said, I think a year ago, that he said the growing workforce, not just workforce participation, the growing workforce was helping to rebalance the economy. I think his words was that it was tilted too much in the favor of workers. I know some workers who might disagree, but nonetheless, seems to be there. You had mentioned in your discussion with Mr. Vargas that where our growth on all these metrics, from GDP to job creation, recovery from COVID, is outpacing all of our other peers. Mentioned Japan being an exception that famously is not as open to immigration as some other countries.
That is true.
And maybe it's too soon to say this, but can you speak to what the United States has done that has led to our outperformance relative to other industrialized economies since COVID?
We have supported the economy in difficult times, and particularly the households and workers who were most affected through programs including the American Rescue Program that made sure we didn't have permanent scarring of individuals who lost their jobs and remained out of work and maybe discouraged and essentially scarred to the point where they can't participate in the workforce. We made sure people had a roof over their heads and food on the table, helped them take care of their children, provided emergency rental assistance, and then put in place a series of programs as the economy, as people got back to work, that are investing in people. The bipartisan infrastructure program, the CHIPS and Science Act, and the IRA are stimulating tremendous amount of investment and creation of good jobs, especially in parts of the country that haven't seen opportunity for a long time.
I think we've got a lot on this side of the dais and in your office, a lot to be proud of what we did to go through. And maybe we can follow up offline. When so much of the growth in working age population is from the foreign-born population, and when so much of the conversation over here on the Hill is using immigration as a political football, I want to make sure we don't cut off our nose to spite our face and understand how that contributes.
I agree. I think it's been a plus.
I see I'm out of time. I had wanted to follow up with you on the FIO and climate risk, but I'll follow up with you offline on that one. Thank you. Yield back.
Thank you.
Gentleman from Tennessee, Mr. Rose, is recognized for 5 minutes.
Thank you, Chairman McHenry and Ranking Member Waters, for holding this hearing, and thank you, Secretary Yellen, for taking time to be with us today. Secretary Yellen, I've been following news of insurers pulling out of states like California. And as a former state official myself, I'm confident that the culprit is a terrible state-based regulatory environment. Given the focus of this administration and the Treasury Department on the solvency of the financial system and our financial institutions, what would be the impact of insurers underwriting the risk of their policies at levels that are lower than actuarially sound?
Well, they would tend to lose money over time and not commercially viable for them to do that.
Thank you.
Without some other government
I
support.
completely agree. And what would happen to the fiscal stability and solvency of insurers who were forced to issue policies at rates that do not reflect the risk they cover?
Well, they would be financially challenged in the event that a risk event materializes.
Thank you. I completely agree with that. Thinking back a couple of years ago, actually go back to the fall of 2021, as you'll remember, some of us on this committee were concerned about the overly aggressive spending of the federal government. We were concerned about early signs and signals of inflation. And in a hearing at that point, I asked you did you have concerns about the national debt? And as I recall, and I'm paraphrasing your words, but you expressed the view that the interest payments as a percent of GDP were particularly low, and that maybe that was a more reasonable way to measure the federal debt. Shortly after that, I asked the Fed chairman whether he would commit to keep interest rates at near zero so as to make sure that the cost of financing the burgeoning federal debt remained low. He answered correctly that he would not, in my view, and he has not. The Fed has not kept rates low. And so we find ourselves, fast forward a couple of years, and we find the cost of financing the federal debt ballooning. The Congressional Budget Office has recently stated that the higher interest rates could lead to the government's net interest payments spiking to 6.7% of GDP and beyond. And of course, current estimates this year is that net interest may exceed $800 billion and just a stone's throw away from exceeding the cost of national defense. I wonder, in light of these changes, has your assessment of how we measure the capacity of this country to finance and to continue to incur additional debt, has that changed?
Well, I still believe that real net interest is an appropriate metric for judging the path to decide whether or not a fiscal path is sustainable. Real net interest in, I believe, the most recent Biden administration document, the mid-session review, I believe that it remained over the 10-year window, given the proposals in that budget, at around 1%, which is historically normal. But the budget included $2.5 trillion of deficit reduction that Congress hasn't acted on. So in order to, now that's a low level, and with higher interest rates. Now, we've always projected that interest rates would rise from extremely low levels to more normal levels. But if the interest rate path moves up, that does imply, of course, higher real net interest.
Pardon me, in the interest of time, if we assume that rates remain at historic long-term norms, which would be at or above the current levels, is the current fiscal situation sustainable?
Well, we've not yet issued. It depends on the actions that we take. And
So new debt would be difficult to support at these
We're
interest
preparing a budget for the next fiscal year, and will contain proposals to make sure we are on a fiscally sustainable path.
Well, I'm deeply concerned about it. I fear we are nearing the point of a tipping point where this country cannot sustain the fiscal levels that we see now and cannot service our debt and continue to honor obligations to the American people. Thank you for being